Vincenzo's Gold Crypto Investing on this July 4th, Independence Day 2025 holiday 3-day long weekend here on this gorgeous sunny with high overcast sprinkled in between there with the gorgeous midsummer blue skies just north of downtown Detroit inside the great state of Michigan. With a current temperature on this holiday of 78 degrees, and we ask you to bell notification as Bitcoin's down 1.8%. Comment down below as Ethereum and XLM are down 3.80 and 3.03 respectively. Comment down below, like it, and share to get that truth, trust, education, and information, and join me on my mission and join the movement yourself for as cheap as $3.99 a month to help support the channel as we grow and become asset millionaires together. That's right, asset millionaires via gold and silver bullion as XRP is down 2.06%. Cryptocurrencies as AMP and the Algorand are down. AMP is up 3.79%. And Algorand is down 5.05%. Is this the weekend AMP goes rogue on its own and has a 50 or 75% pump? With gold and silver bullion and mining stocks, 401k steady investing, cryptocurrencies, and real estate, along with a nice supply of cash on the side to act as a peace of mind, as well as buying and accumulating new and existing assets. And that money should earn in a short-term CD or bond 3 to 5%, right? And that's how I'm becoming an asset millionaire. I'm not a financial advisor. And this holiday weekend, we were talking about a potential correction in the cryptocurrencies over this long holiday weekend as we believed we're at major resistance levels. And if you look at where we continue in the XRP to get rejected by, it's at this short-term resistance right here. You can see between the 227 and about the 240, there's this big stick. It's like a middle finger, and then we branch off as we go north of that, and we branch off as we go south of that. And with the simple education, becoming asset millionaires and understanding education and truth to make simple investments to heighten your standard of living is something as simple as this in the short term. Right? This is your mean of the volume in this local time frame in the last about 8 weeks. So there's a heavy resistance level because there's a lot of traders here, which will, when you're coming from above, will act as a sell. It'll snap the sells, snap, sell, sell, like a shotgun going off, right? And it acts as resistance. Then we get to the bottom part of this at about the 204 to the neckline, the 206 neckline. Notice how it falls off dramatically. That means there's a lot of buyers and support when you're coming from above. So every time you're coming from above it, it's getting bounce, bam, snap back, bounce. If you go back further, snap back, bounce, because there's heavy movement and buyers and activity there, and it's acting as support there. But if you get too much below that, you will have a big flush to the downside. The same as if the reason you're having so much rejection up here is if you break this 240 and get above it, you'll pump and you'll have a big wick and a big skyrocket candle to the upside where you'll clear the 253. Then you'll clear the 264 and end up, before you know it, like that at 275, 276. Right? Because look at the trading, it dies off, meaning there's no resistance, there's no buyers or sellers stacked in this area to snipe you, right? The same right here, if you break this neckline, before you know it and you snap your fingers, just like if you look back here a couple of months ago, we wicked down to $1.61 because look where the next group of buyers are, where it starts sticking out. It's down there at $1.54. And that's something we've been talking about, and we feel it's critical when we're talking about the short and medium-term price action in the XRP. And this weekend, we were talking about if we get heavily resisted, we had two possible outcomes. You're going to get this heavily resisted, get confirmed, and get pushed back down to the 209 neckline support this weekend and the 200-day moving average and eventually get rejected by it. And this weekend, you could have a big flush where you could come all the way to a regional support level, which would be down here at $1.90. All right, and apparently we're going to have to put this on Do Not Disturb because we're just getting onslaughted and infiltrated with alerts during this video. Right? And that could be a possible scenario this weekend. And that would be if this did happen over this long holiday weekend from the current price or from where it started yesterday, that would be a 15% move to the downside. But on the contrary, if we can get above this critical area over this long holiday weekend. You could have a big explosion if a big pump in volume comes, and it could shoot you all the way up here to where one of the tracks shows you up there at the 255, right? See how one of the tracks shoots you straight to 255 this weekend, and one of them brings you down here, right? It's very critical, and the thing that's been saving us in the short term is every time we've come into this 209 neckline support, you can, I mean, it doesn't take me to show you, or a scientist or a stock guru or a technical analyst to tell you support, buyers, support, boom, support on that February 3rd, massive wick, support, massive support after an attempted breakdown for the first time, support, another attempted breakdown, support, and now we're up here. Look at all of that. From December till now, a half a year's worth of support where we've been essentially trading between the 209 neckline support and this major upper resistance at 255. So that's what we're looking at this weekend. We still have a technical target of $1.29 off that head and shoulders. The XLM is the same thing, except we're below the 25 cents. Its major support level has been this 25.5 cents, this blue horizontal. Notice support back here in February and then March. Support and an attempted breakdown, but rallied. A first real attempted breakdown and an immediate rally from the 20 cents all the way to the 33 cents. And then we've traded sideways support back here in May, end of May, early June. And finally we flushed through it. And now we've been for about a week consistently below it like we were here. And now this weekend, are we going to do something like this where we have another one of these, just like XRP did 3, 4, 5 days ago, and then this weekend we shoot straight up back into here up to 27, 28 cents and just repeat this exact thing right here, because we had the dump after a consolidation, then we traded sideways for a few days, and then we come back up and confirm this again as support instead of confirming it as resistance. And that's what I'm looking for this weekend, because if we don't do that, or we get a classic hook nose bearish, we're coming straight to 18 cents. But if we're going to replay what we did here, over here into the future off a mini regional local double bottom, that would be enough to pump you up into this region and get you on top of this 25 cents, just below these three moving averages of the 50, the 100, and the 200 in the daily. And you can see the 50 is right at the 25 cents. So that's what we're looking at in the short term, right? We are either going to get a rejection this weekend and end up down here by Monday. I believe, at least. I'm not a financial advisor. These are only my own personal opinions on the market. Or we're going to attempt to get up here like the XRP and sit up here for a few days, right? So that's what we're looking at in the XRP. If we look at the AMP, we've had a nice bounce. And we told you AMP occasionally will go rogue, where the rest of the market is consolidating bearish, and AMP will just go up 50 or 100%. Just as when we peaked down below, a Jabroni killer member asked me, what happens now? Is the pattern invalidated? I said no. It could just be doing what it did several times in the recent past. Back here in 24, tried to break down. Had a wick below in August of 24. Had another wick below in April of 25, and another wick below in June of 25. But just like all the other times, bounced up, consolidated, pumped, bounced up, consolidated, pumped, bounced up, consolidated, pumped, bounced up, consolidated. Are we going to pump now, right? And we've had a little bit of a pump this weekend, but we got rejected by the overhead 50-day moving average. You can see that right there. So as long as we're above this consolidation, we're still within this pattern formation that we thought we were in. Algorand's the same thing. You can see we attempted to get back above this major 50-day descending moving average, which is just below the descending overhead 100 and 200, which are both just above that critical 20 cents. And if we look at 3 times, 1, 2, and now 3, we've gotten rejected beautifully by the 50-day overhead moving average. And it's continuing to reject it. And if we can't change that, we do know in the short term we're coming down here to this 10.5 cent level. If we can try to change that this weekend and stay above this 15.25 cents, we can try to get back over these major overhead bearish moving averages, which is a very tough task. But we would have to do that, get on top of them, and then just like Ethereum has been doing, sit in between the 50 underneath and the 200 overhead and consolidate and then attempt to try to break out of that, right? So that's what we're looking at. We had a Jabroni Killer member ask me if I had a stop loss on my short-term swing trade based on the 3% pump. And the answer to that question is no. And he asked me, how would I exit the position on a loss? I would just have to make a decision. But stop losses to me set me and stop me out of a position to just have the price quickly reverse itself. Because if you look at what's been going on the last month, if you were taking a long or a short coming from this 103,000 on May 6th, how would you have a stop loss and trade this other than just to have conviction and then just know your range to get out? Because look at what a stop loss would do. Let's zoom in on this bigger, because take a look at these first few moves right there from where we started. Look at where you were from where we started. You would have had a move here and a wick down of 4.5 to 5%. Are you going to let that take you out? Then say you have this big rally that blows you out somewhere at a loss all the way up here over a 3 or 4 day span, and then you think it's over, and then look what happens. 4 to 8 days later, you're back below where, say, you bought here, and then if you bought here where we were at, where we started, then you get stomped out here at a 6 or 8% peak for a 3 day from the 21st to the 23rd, a 3 to 5 day peak. And then before you know it, you're back down at even, right? And then if you kept playing this into the future, look at that. You would have been in profit when you locked in 2 or 3 weeks earlier, a 4 or 6% loss on a stop loss. And then we can continue and see the recent rally. Then we had the big dump. And then we had this most recent rally here. Nope, it was more. Then we had the big dump down to 97. Then we had the big rally right here. Then we entered our position. It went down, then it blew up, and now we're where we're at. So the question is, I will exit the position, just me seeing it and saying it's too much, it's too far, and there's a time to cut losses. But I won't do it on a stop loss, because in the short term here, it would have stopped me out at a 4 or 5% loss the first time about 10 days, 8 days ago now, just to become even. When we did this right here, we got back to even or slightly profited before we had that overnight pump. I think it was Tuesday or Wednesday of this week, right? And now we're giving it back on this long holiday weekend. Does that mean it's going to continue? No. Does that mean this thing might end up by Monday being up here like we talked about yesterday? It could be at 116 or 118,000 on Monday. Or it could take the sell track like it did here, like it did there, here, and now, right? It could do one of those. And that's what I was banking on that it would do, because I've seen it happen. And we're hoping that come Monday, we're sitting down here near upper resistance at 102 or 103,000, or potentially at the 97,000 underneath major support, as we've been in this rising channel for quite some time. And as you do know, there is an upper end potential of 147, 640, 651, right? That is possible with this rising channel that we've been in ever since that mountain double top off the COVID pump. Then we had our capitulation down here. You can see where the capitulation happened, followed by the rounding bottom, and then this rising channel with descending overall volume, right? Like the channel, subscribe. We'll have more updates this holiday weekend. Peace and love, and enjoy your Freedom 2025 holiday weekend. Peace and love. The Rex Eyebrow.